What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we're getting very close to critical support within this bull trend, so it's going to be very important to follow price action from here. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today's SPY was down 0.43% and we're still closing right near this support zone right around 448, and this is going to decide which gap in SPY we likely fill first. Now we have the gap down here right around 443 and we have the gap up here above 455, and we know these gaps are very likely going to get filled and we're stuck right in the middle of both of them. Now, bigger picture, we're still in a bull trend, and bigger picture, the expectation is still higher prices, and today I'm going to draw out the path that I would expect. And while I don't necessarily think we have to go much lower, it's always safe to be prepared for any scenario. And in the bullish scenario that I'm expecting, we're going to put in a higher low, retest from the previous breakout, and then continue back higher towards SPY 460. And that could fill the gap at 443 before we fill the gap at 455. Now, the number one thing I want you to pay attention to is that if you're playing risk reward and you're playing the odds, and if you think there is a good possibility this is going to be the outcome of the market, you can see there is a lot less downside than there is going to be upside, and that should play into your trade plan when you're managing risk and reward. Now, in a bearish scenario, we need to lose this support zone at the rising 50 EMA and the retest of the breakout, which is going to require SPY to break down below 442. And in that scenario, then we're likely going to see SPY coming down to 430. So if you manage risk at this retest and we start to break down below it, you need to get risk off below critical support, because below critical support, we're likely coming all the way down to 430. So critical support on SPY is going to be right there, right around 442. And I still have the expectation, because we're in a bull trend above a rising 50 EMA, we are going to put in a higher low before the next higher high. And the only way I'm going to assume this is not going to play out is if price action proves me incorrect and breaks below that critical support. So for that reason, that is critical support you should be managing risk to. And if you're bullish and aggressive, you should be accumulating on the dip, getting ready to manage risk if we break below support. And then if we bounce from here, then you can start to lock profits at higher prices and then secure those profits. So whether you're shorting or longing the market is irrelevant. What I'm trying to teach you here is that the odds in a bull trend are higher prices. And typically you want to play the odds, because that is going to make trading a lot easier if you trade in the direction of the trend. And this is still a bull trend until it's not. There's a lot of people been trying to call tops all year long, and there's a lot of people that continue to think every pullback is going to lead to a deeper correction or a crash, and they have all been shallow pullbacks before we go make higher highs. And I've talked about a lot of reasons on why SPY is likely going back to the previous all-time high and possibly even making brand new all-time highs. So we have the objective evidence that we're likely going higher. So it's now your job to manage risk and then put the odds in your favor. And if you think the odds are in your favor in the short direction, then that is completely fine. But we're instantly getting a lot more bullish if we break back above SPY 452. So 448 is an intermediate level to manage risk from, but the stronger critical supports are going to be down here at 442 and the resistance above at 452. On the NASDAQ 100 triple Qs, we were down 0.85% today, and intraday we were very close to closing the gap, which was outside the lower boundary band, and I talked about the possibility that we don't fill those gaps because they're below the lower boundary band, and it's going to be difficult for price to break too far below those bands without finding buyers. So no, that gap did not fill, even though it was very close to doing so. So just like SPY, I'll draw out a projection here, and it's possible we come back down towards this rising 50 EMA, find support, and then continue higher to finish out the month, which is likely going to be a break of that level at 387 and reaching that price target up there right around 393. Again, there's a lot more potential upside than there is potential downside while we are trading above the rising 50 EMA at that critical support at 366. So in the triple Qs, you have critical support at 366, and the resistance we need to break is this critical resistance above at 375. Above 375, we have a gap fill above 380. And as we're continuing lower below that level, it's possible we test the rising 50 EMA and fill the gap just above 368. So you have very clear risk levels, and we're sitting right above critical support. So in a bull trend, this is where you manage risk from, because this is our previous breakout and our rising support. And if we hold this level and we continue higher, this is continuing to be a textbook bull trend. On the Dow Jones, we were down 0.45% today, and I have the same arrow on here that I drew last Thursday, and you could see the Dow Jones almost filled the gap and only left 1 penny of the gap open. So while that gap is not fully closed, it was very close to doing so today. The resistance in the Dow to break is 353, and I still think we're going up there to 360, so I'm not changing anything about this prediction. I still think while we're above 350, we're going to 360. And then if we break below 350, then we're likely coming back down to retest the breakout at 346. Also pay attention that 346 is the rising 50 EMA. So if you're bullish, you need to save dry powder in the event we come all the way down to critical support, and you shouldn't be all in at the first support level. On the Russell 2000 IWM ETF, we were down 0.63% today, and we had a very nice bullish daily close because intraday we were outside the lower boundary band trying to close the gap above 190, which is also going to be the critical support zone right above 188. So in the small caps, it is possible we come all the way down to 188 and then start pushing higher towards the price targets at 203. And I did the weekly technical analysis on why the small caps are likely going to be bullish over the next coming months. So this is still my preferred scenario for the small caps. Now, all of that changes if we break below 188 because that's critical support. So in the event we break 188, that is a more bearish scenario and you instantly need to get risk off. So you have very well-defined risk in the small caps. The critical resistance level we need to break is up here at 195, and above 195, we should be back on the bull and off to the races. On the ARKK ETF, we were down 0.53% today, and we now have the official retest of the bear market resistance breakout. So I'm going to move this arrow just a little bit to catch up to where we are with the price action. And this is a perfect breakout and a perfect retest. Now we just need the confirmation, and we need to start seeing the price action bouncing from this retest to confirm the bear market is over. It is possible this was a false breakout and the bear market is not over, but price action is going to need to prove it and break through this critical support at 44.5. Below 44.5, we do have gaps to fill all the way down below 36, so I would instantly manage risk if we start to close below this critical support. However, if we start to bounce, we have a gap to fill above 48 and we're likely heading to the mid 50s. On the VIX, we were up 1.33% today, and the VIX projection was that we would go up towards 18 and then start to crush back down towards the VIX gap fill, which is just above 14. This is still what I expect to see in the VIX, and this is exactly going hand in hand with what we're seeing in the indices, which is that we're putting in a higher low before the next higher high, and that would crush the VIX down to these lower levels if the market is getting a bull breakout and going to higher prices. If you want to be a little more risk off, just be a little more conservative and risk off while the VIX is above 15. But by the time the VIX breaks down below 15, you've likely missed a very strong bounce from those critical support levels. On Bitcoin, we're currently up nearly 3%, and Bitcoin is getting a risk on signal of high volume buying, and we're breaking above that resistance at 30,000, and we're sitting right on top of the upper Bollinger Band as these Bollinger Bands are squeezing and getting ready to expand. So you can instantly get a lot more bullish in Bitcoin above 29,500, which is also your risk level of support. If we continue higher and break 31,000, then I'm expecting to see Bitcoin running off to 35 to 36,000 next. On Tesla stock, we were down 0.7% today, and we're still closing right on top of the 50 EMA, which is starting to lose the positive slope. And if we go too much lower, we're sitting right near critical support at 230 and the gap fill at 235. Now, Tesla, you could play it many ways, and if you're bullish long term, then you can start accumulating as we approach critical support at 230. But if we break below 230, you need to get a lot more risk off because then it's starting to look like a falling knife. If you want to be more conservative, wait until Tesla can break above 270 to 274, and then you can still have a nice trade up to fill the gap above 289. So it's up to you how you want to manage risk, but right here on Tesla, this is going to be a critical zone at 250 while we battle to see who is going to be victorious at the 50 EMA. On Apple stock, we were up 0.53% today, and Apple is the third day below the lower Bollinger Band and extremely oversold, and we did close green today with a hammer candle, so it's possible Apple is getting ready to bounce with the upside resistance at 182, 185, and the gap fill above 190. Now, it's unlikely that Apple is just going straight to 190 without any sort of resistance on the way higher because there were people caught off guard in this stock and they're going to try to get out on bounces. So it's more likely that Apple is going to chop around and then start heading up towards that gap fill. So if you're bullish on Apple, you need to have patience and you need to manage your risk down here from 177 and this gap fill just above 175. Now in Apple, it's difficult to know where it's going to go in the longer term, but in the short term, it definitely looks due for a dead cat bounce, which is likely going to take it to 182 to 185. So jumping back over to the S&P 500, I drew out the projections of where the risk lies in this market, and you can see we have just a little bit lower to go before we hit critical support. And yes, it is possible we do go all the way down there and touch those critical levels before this bull trend continues. So when you're in a bull trend, this is your opportunity to take on risk. You want to buy during the pullbacks, and you don't want to panic sell your positions, because during the pullbacks are when you're getting those buying opportunities. And then during the rallies are when you lock in profits and secure those gains so that you're building wealth in your portfolio and you're starting to compound those gains. This pullback to critical support is completely normal and it's completely healthy, and you're going to know the bulls are still buying if we get a successful retest. So the price action is going to do all of the talking. If the price action fails to hold above critical support, that likely means the bull trend is ending, and then we're going to start getting more bearish and tracking the downtrend. However, that requires objective technical analysis, which means price needs to prove it, and so far price is still above critical support, and we are still in a bull trend until we're not, so that is how we are going to continue to view this market. If price action proves us wrong and breaks the bull trend, we adapt immediately and continue to trade this market with objective technical analysis. So if you want to come crush this market, consider joining Bank Trade Alerts or the Stocks Channel Discord server. You can find out how to join either service by clicking on the links below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.